Good afternoon, everyone. This session was originally planned last evening, but then it had to be rescheduled because of various other sessions that got delayed. So no worries, we'll make up today for the lost time. Okay. So today's session is on smart moves. Like, no one knows who is smart money, where they position themselves. But we can through few data points, we can pick up where the major players are positioning. Okay, so let's see how we can do that. So this is about me. You all have heard me yesterday. I'm a derivative trader for more than 20 years, a pure positional stock trader, not an hardcore index trader. Basically from Bangalore, and then this is my first time in Traders Carnival. So let's start with few of the saying in our market. Bhav Bhagwan che. This time it's different. I mean, a lot of people have blown up their account saying this time it's different, right? I got in early. The trend is our friend. I mean, no one knows how to pick up the trend, but yes, the trend is our friend. I mean, there has to be some mechanism to find what is the trend, but yes, everybody says that. And the last one. Biggies make their position first and then the price move. Anyone believe in the last line? Has anyone noticed that, the last line? Okay, I see some heads are nodding there. Okay, okay, and I know sir is very senior trader, so he has seen many summers in this market. So sir has got a few decades of experience. So we'll talk about this. Biggies makes their position first and then the price move. So how can we make out where the biggies have positions? Let me show you one chart, and then not a chart. It's an okay. So this is a simple open interest. Okay, so there are many applications of open interest. Open interest is different for future, different for options. I'm going to talk about future open interest. Okay, now what are we going to do? How are we going to know why it is not the regular OI built up this time? So let me. So the topic is tracing smart money moves. And then our mantra in this all is detect and decode. See, we have to detect the anomalies. We have to detect the outliers. See, open interest, like if the market is open, every stock will add some or the other open interest, 10 lot, 20 lot, 50 lots. But we have to detect the outliers where, like, say, 1,000 lots got added. Okay, and this is in the future, not in the options. So how can we detect? So this is the simplest application of open interest. See, we are still 20 days to this expiry. I mean, we are just on 10th, and then expiry is on 31st. You know what? There are simple mathematics. All you have to do so let's make a benchmark. What is the benchmark we'll do? On the very first day of every expiry, on the very first day. So benchmark is the first day. And stock opens up the series with certain number of open interest. And you can see the historical data. Say some stocks open with 3 lakh open interest, some stock open with 4 lakh, some even with 1.5 lakhs. Okay. Now what we have to detect, which all stocks have opened up, say the average is 3 lakh and they open up with the 3.5 and 4 lakh something. So I was like showing you one Excel chart. Okay, this is the one. See, this is Indus Tower. Few days before the big 10% fall comes in, like there was a news from Vodafone selling of their stake, right? See, this is the position built in the market. So usually their open interest is about, I have to see, 15 lakhs. But much before the news comes, people have positioned themselves. And when I'm comparing with the historical, it is way, way higher than the average of the last 4 months. So I have detected something big coming into the stock. I don't know. And see, the open interest can be long as well as short. Don't think that smart money only goes with the long trades. I mean, they do have a lot of shorts, okay? And it's a mix of both. So not be biased to call out, smart money, okay, ye upar hi jaane wala hai. So we have to detect all those. How can we detect? Set a benchmark. What is the benchmark? For now, like in this case, we are setting up the benchmark of the first day of the series, okay? Let me show you some Excel data. Okay, so in this file, I have done it, and doing it is very, very easy. And this is another stock. See, Crompton, their average open interest, when they start the first month, is about 1 lakh and 73, 1.73 lakhs, okay? But when this series started, they were about 240% higher than the last month and even 144% higher than the average. This is not normal. See, kuch to hai. Somebody has put in money, and then to build a future open interest, each lot needs about 2.5, 3 lakh rupees. Nobody will just block their money without any news, without any research into that, right? So there was something into the Crompton on the very first day of the series. And this I have traced, say, 5 or 6 days even before the series start. Now the second thing, there is an active series at hand. Why someone is making position in the next series? What is that they're going to be? So when I was tracking this, this is easy. I will teach you how to do that. There was something. You know what? The day series started, Nifty was down more than 600 points. And if you all can see on your computer, Crompton did not even fail 1 rupee. Nifty was down 600 points. That says the smart money was so. I just saw Amit. He was telling about Cipla, everything was falling, but Cipla was not falling. This is the case where people have positioned themselves and they did not let their position to go into drawdown at all. So what we have to do, again I'm repeating, keep a benchmark. You can keep this benchmark even on the 5th day of the series, first week of the series, and then trace the month on month built up on that particular day. So this case I'm doing it on the first day of the series, okay? Now we all have detected, okay? So a stock starts a series, say, 2 lakh of open interest, and it would be great if you can extrapolate that to number of lot, because number of lot gives you better visibility. See, 15 lakh in Vodafone means nothing. Their lot size itself is of like 50,000, 60,000. But 15 lakhs in MRF, it's a big one. So try to extrapolate that, to the number of lot, and NSE has a lot size file. All you have to do to either develop a Python system or any language, or a simple Excel VLOOKUP can do that for you. Okay. So once you have detected which stocks have an outlier position built, you have to decode it. Okay. Okay. So how are you going to decode? Okay. These are the few examples. When this series started, okay. This is HDFC. We all knew what happened. Like HDFC started the series again with the 15 lakh of open interest, but last series and this series were higher position built up than the previous month. And then if you go back and decode, I'm going to teach you how to decode. You will find even before the HDFC starts in this new series, people have positioned themselves in the bearish trade much before in the last series. Like there were still 5-6 days to go in the last series, but people were selling next series HDFC. Okay. Crompton, I just spoke about Crompton. Look at this is real outlier. There's nothing else to say about this. Now, when we are talking about built-ups, we also have to be mindful of low built-ups. I'm not talking about the rollover, right? This is low built-up. See, this is PNB, okay? Usually, this retail, and no offense to any retailer, they're quite upbeat about PNB future. They always keep few lots open. 100 रुपये तो होने वाला है next few months में. But this time, nobody bothered to build the position in the next month. And then we have seen what happened to PNB in just 5 days of the series. So it's not that we have to be, only mindful of the outlier position built. We have to also be, keeping an eye where positions are no longer. And that helps when say there is a short built up for month and month and month. And then suddenly those shorts were not, into the new month. That is the first sign the stock is getting a reversal. Okay, or there is a long built up month and month and month, and then suddenly there is no more those positions into the system. So that is the first sign that, see, a bullish trade and no longer bullish does not mean a bearish trade, but it's no longer bullish. Okay, so PNB was the first one. See, I think retailer gave up this time. Okay, so we have to be, keep a real eye onto this. I think there is a trade into PNB also. So how to decode? So after identifying the stock, positions which were having an abnormal build-up, we need to determine whether these are long built-up or short built-up. So there are 3 ways, okay? First, we have to go to the NSE site and open the next expiry, not the current expiry, OI changes. So you will get to see, let me show you one. Okay, tell me one stock you wanted to see. Anyone have any stock to see in next series? Tata Motors? Tata Motors and Tata Power still have a lot of fan. Okay, so go to derivative, and there is a, suppose you are doing it, say last week of the expiry. You wanted to see how much position built in the next expiry, which is yet to start, but people have positioned themselves. Let's see this now also. So you go to historical data, and we are only interested for now is the future. Make it 22 and expiry. We're going to look into April, okay? Okay, see for now it is very, okay, not very less, but yeah. So what we could see, some positions were built, okay, and it's not big in numbers like 1,68,000. But as and when we start moving into the new series, you get to see a lot of positions are built, and that is not on the last week. Even before 10, even as early as 10 days before you start to see, as like 10 lakh, 20 lakh open interests are built. Those are the smart money has already positioned themselves ahead of time. Like we always say, biggies make their position and then the price moves. So they have positioned themselves. So you start doing it, like 10 days before the expiry, you definitely get at least 1 or 2 stock. I'll tell you how to detect those. I mean, you really don't have to go to every single stock and check. I mean, you can develop a mechanism and you can do that. So you go there and see which is the date when the position started to get added, okay? Now what you do, a simple, price versus open interest, price up, OI up. That's everyone knows. Every YouTube channel, every broker terminal gives that information. Now, just before me, Amit was talking stock versus headline index, like stock versus Nifty, relative strength. If you don't have any mechanism to track relative strength, what you do? Go to investing.com, put that period. Okay, let me show that also. So say we are in the last 10 days of expiry, okay, and we have to see the relative performance, not in terms of relative strength, but in terms of Tata Motors, and it's very easy to do that. Historical data, and change the date to the date when you start seeing those positions getting added in the next series. So say I wanted to see the last 5 days, okay? So today till 8th. So this stock has changed minus 13%. Now, if you see, of course, Nifty cannot change minus 13%, but you get an idea. Okay, Nifty has moved 5% negative and this has moved 13%. Definitely, it is the short addition, right? Had there been a case like Nifty has moved 3% and this has moved 10%, then the long addition. So whatever position getting built in the next series, you can do a simple, the comparison against the headline index. If the stock is part of any sectoral indices, you can do that with the sectoral indices as well. Like any bank stock with the bank Nifty, auto stock with the auto Nifty, you can do that as well. RS comparison, that is a little, I do little differently than what was the session in the morning. Okay. So what I do, I do the RS on the 2 scale, Nifty and the sector, and then you have to do it on a 7-day scale and the 14-day scale. Usually we find that kind of position built in the last 7 days of expiry. So what I do, 7 days में क्या हुआ है against the headline index, okay? And then so let's see this. Nifty Betel, 7 days में see it is 13, and then on the 14 days it is 6. So definitely it has 6 itself was an outperformer to headline index, and 13 the outperformance continues or perhaps it's getting better, right? So that gives you an idea. So if you can do this with the stock. I don't know if anyone have meta stock, but I can teach you doing it very easily, quickly, like 30 seconds, you get all the information. Let me show that also. If you have a meta stock, you can do it in less than 30 seconds. So I'm doing it on all the stocks of F&O. And I have no mean to promote meta stock because I don't sell that. But definitely here you get some vendors who can help you with that. Okay, we'll see for the Tata Motor itself, nothing else. Huh? let's So this is something we practice ourselves. We have given some maths to call out an accumulation or distribution. How many accumulation we have over the last 25 trading days. That's not the subject this time. Possibly next time we'll talk about that. But for now, what is the easiest way to do that? You minus the 7 RS with the 14. And you get the difference. All the difference in the positive are the one which is stronger. So Manappuram. It was weaker. How much weaker? Minus 18. How much it is now? 3. See the performance and the gain into that. So if my stock, which has say a huge build up in the next month, and I'm getting a positive RS, this build up is not short. This is a long build up, and then I will also be with that smart money. I don't need need to go to the IIM to learn that. Those guys have learned. They are doing it. I'll just copy them. Okay. So here it is. See. Metropolis Health, still it is negative compared to Nifty. But look at the negativity a week back, like 14 days back. It was minus 16 and it is just minus 1. Yes, it is still negative, but the ground it has covered like much better than many frontline stocks. So I will never ever assume or never ever go by the fact that market is down. This is a short build up. This is a long build up even in the down market. Okay, so you can use you can use the detection to be on 3-tier basis. Use is on the price versus OI, stock versus Nifty, stock versus the sectoral indices, and then you can use relative strength. Relative strength again, I prefer doing it on 7 and 14 days because I find a lot of positions were built in the last 7 days of the expiry in the next series. Like this expiry will end on 31st. So by 22nd March, you get to see a lot of people are adding their position in the April expiry. So I do it on the 7 and 14 days scale. One important thing, eliminate the stock which are new into F&O because there the positions are really low at the beginning. Like, any stock which got added this month, can you tell me any stock? Okay, I have removed it for the sake of discussion, but okay, so ABB got added and there was no comparable data in the month of November, December, January. So there's no point I should keep ABB into my analysis at all. So eliminate the one which are newly added into F&O and see what we are doing. We're trying to find out what is the average built up when a series start and what is the built up today. And then we have to find an outlier, abnormal positions. If something new into the F&O space, it may not have a historical data to do that. So there are enough stocks, 205 stocks to do. I mean, 4-5 बाहर भी तो कोई टेंशन लेने की बात नहीं है. ठीक है? Now, there are some fine prints, and when you're detecting it, look for sector specific. Say you got 4 banks into that. Trust me, if you do this back testing, you will find before a sector start to take a reversal, change the direction, like metals, it had a dream run. So when we run that, like last year March, there were 5 or 6 metal stocks in the abnormal build-up. Okay. Another important thing, see, stock is in long trend. Like when we started February month, Wipro was down 20%, and all of a sudden, we had a huge build up, and then we said, okay, stock has already corrected 20%. Why would anyone sell now? Why would anyone create such a big short position now? These are the early sign it is taking a directional change. On the first day of the February expiry, when it started, Wipro was just 516 and the next 7 days was 560, like we had a 54%. We are spending minutes, like hours to get 1% move, we are getting 10% move in like say about 5 days, okay? And with no much effort. So, 2 important points I always say, look for a sector specific. Let's see if we had anything last month. Okay, so there was one metal. Okay, so nothing looking to be a sector in at least March month, but quite often when a sector is changing its direction, for example, chemical, metals, or even whenever bank changes, you will get to know into this. Okay, so look for built up against the trend in a particular sector. Okay, you will get the first sign there. By the way, I just shared the relative strength. You can do this on the sector also, and you get the first sign of sectoral move. Okay, I will show that also after this. Okay. Next thing, we can start tracking this as early as 10 days before expiry. So still we are 20 days, not much. And see, we have a lot of event lined up, an election result tomorrow, and then there is a ongoing war. So people are not very, happy with regard to the position. But had this been a normal month, you could have got 1 or 2 in the next series where out of nowhere people have positioned themselves in the new series. Okay. So in the last few minutes, we have learned how to detect the abnormal one, and it's very simple. Keep a benchmark, like first day of the series is the benchmark. Every time, certain series you get like that is 100% or 200% above normal. Okay, and then decode it. Decoding is very easy. Okay, now I'm done with my content presentation. So it's open for the questions and answers. Yes, sir. Metastock? So that was on the decoding part, sir. I will run through that. Yeah, I'll run through that. So, sir, we have detected a stock, okay, and it's telling abnormal built up. Now, I have to do, is this built up is long or short? So there are 3 ways, okay. I have seen one, like shown one on the investing.com. Index has moved 2%, that has moved -3%. So it's kind of a short built up. But Metastock is much more, easier way to do that. I will show that, sir. So this is a Explorer you have to write. I have written for myself. This is Explorer you have to write, and then it's a simple RS you have to give. And then we have also given a formula to detect, volume based, like is it an accumulation going on or distribution going on. So we have one Explorer to give us both the number. So simply I just run this, copy and paste on an Excel. Now it is easy, sir. I'll remove this thing which is not needed. And so what I do, I minus the 7 RS with the 14. Okay, so you get the underlying strength or the weakness into that. Or okay, let me tell you. Okay, Nifty Bank is improving. So see, if I see Nifty Bank performance with regard to Nifty, it was -4, and then it is -3. So it is improving. By the way, so say let me tell you, sir, Adani for that matter. Say you detected Adani, is the stock where a lot of built up. RS is telling us, 1. Okay, one thing is it is outperforming. But what if it was 10 a week back? Then it is not outperforming. It was like actually it is getting weakened, right? So we have to have another benchmark to calculate is this one is strong enough or getting weakness. So I added another 14 days in the same calculation. So now one is like against -3. So there is an extent into that. So I minus that whatever positive is the more likely to be a long built up than a short built up. So detection and the decoding. Decoding has to be only 2 part, long or short. If it is the positive on the RS, it is long. And then of course, you have to go by all these 3, price versus open interest. Every kid knows that. That stock performance against the sector performance and the stock performance against the Nifty performance. Any other questions, sir? Any other questions, sir? Anyone? Yes, sir, please. You can come on this mic, yeah.
Basic question. How did you generate the OI in comparison to the average OI?
Well, you know what? Okay, so be there. You tell me last. So I have developed a Python application, okay, and you have to help me with the dates, and I'll tell you how do I generate. So okay, all I have to do. I mean, this is a program written, and it's very easily you can code it. All you have to do is to put last 4 the dates when the series started. So I'll tell you the first date. It's 26/11. Your like fourth series started, right? Then 31/12. When is the February series started? Anyone remember the date? 31st January? When was that series started? Anyone remember the date? Sorry? 25 Jan? $25, $27, $26 डाल दूं क्या? Okay, it's 28 Jan, sir. Uh, 28/01. Sorry. And then I have to put latest date. So or whenever the February series started. I think that was like 25th Feb. Yes. And the February series ending on like 31st May, 31st March, right? I made a mistake. Wait. Wait, I made a mistake with the year. I have to restart it. Kaurabji, what is the date you said? 25th Jan, right? 20. '26, 25th February and 31st March. That's all. We have to put some 3 previous date and 1, the next month date, expiry date, and then we should have a file generated. So the file has been generated, and it's done. If I go to my folder, I have a very fresh file 1203 ready. Okay, so I don't track Nifty, Bank Nifty. As I said in my introduction, I'm not an index trader. So what I have to do, you see this average to, sorry, yeah, so you get the data. So you get every month when the series started, and then what is the current, built up. So you have to develop a mechanism. If you don't have, I can help you. You can meet me after this. Okay? Yeah, thank you. Anyone else? Okay. I understand people will have questions when they start practicing it. So I've given my number. You can go back and then send me a WhatsApp or drop me an email, or you can drop me a DM on the Twitter. I'll try to reply to you. Okay. If no question, then I'm like say thank you for now, and I'm here for next 2 days. Let's meet and discuss this more. Thank you.